Good day, ladies and gentlemen. I hope you're well. So, this session is a structured market audit based on chain data and macro liquidity data. No narratives, no emotional based conclusions, only what the indicators are measuring, only what they're showing, and also their historical um, impact that they've had on the price. So we're going to be going through the charts. We're going to be checking the latest price movement for Bitcoin and Ethereum, and also what Bitcoin's dominance is doing. We'll also have a look at the 50-day SMA and the 200-day SMA and the death cross that's already occurred, but I'll be telling you what it all means. Now, on-chain indicators are built from data that's recorded on the Bitcoin blockchain, and they measure what the network and the market are actually doing using numbers that literally come directly from the blockchain. It's hard data. It's not headlines. It's not hype noise, and it can't be tampered with. On-chain indicators that we'll be looking at today, again, we'll be looking at the pi cycle top, which is the most accurate pi cycle, the most accurate top and bottom indicator of them all, the MVRV, which is an on-chain indicator that looks at Bitcoin's market value compared to its realized value, and it helps identify, if holders are in profits and where Bitcoin actually is with its price, and the price in the wallets. The Powell multiple is another on-chain indicator. It measures whether miners' revenues are unusually high or if they're unusually stressed, related to or relevant to historical baseline data. The off-chain indicators, because we will also be looking at off-chain indicators, they're not produced by the blockchain themselves. They're external signals that measure things like liquidity, demand, hype, capital rotation. We will be looking at the ETFs, Bitcoin dominance, because it's a market structure indicator. Bitcoin dominance tracks Bitcoin's share of the total market cap, and it's a clean way to monitor capital rotation. Whether flows are consolidating into Bitcoin or they're rotating into altcoins or even out of the market. It often gives us a clue for what phase of the market we're in. We'll have a quick look at the M2 money supply. It's a macro liquidity indicator. Bitcoin is highly sensitive to liquidity conditions. So when the M2 or the global money expands, riskier assets like Bitcoin often benefit. We'll touch upon the fear and greed index and how many coins there are in the space and all the rest of it. Before I do that, before we have a look at Bitcoin's price, let's just quickly have a look at who's in the chat. So we had Alexandra G first. Oh my gosh, she's such a G. Hello, Alexandra G. I hope you're well. Black Hat Team, I hope you're well. Silver Days XRP, I hope you're well. Please do smash the likes. That's very kind of you. Thank you, Silver. John Legend, I hope you're well. And there we go. Oh, this is so funny. So just before I started the live stream, I swear to you, I thought I saw somebody at the corner of my eyes. I just got so scared. Oh my gosh. Okay, so let's have a look at. Let me share my screen. Which screen am I sharing first? Okay, so that's better. Okay, so here we go. Obviously, I'm an investor, position trader and swing trader. I don't do scalping and I don't do day trading. So we're zooming out of the market. We're going to study a fractal, which is here, and it has repeated in 2026. As we can see, we we came out of the bull market into a bear market. We ranged for a bit because quite often we do range before we entered into the recovery year, and we started to go up in this channel. This trend line's from 2013. We started to make higher highs. We've got that fractal that we'll be covering as well. We hit the all-time high for last cycle, or for 2025, which was in, I think it was the 6th of October, actually, the 6th of October 2025, and it was at 126,296. From there, we have descended downwards. Now, according to the 4-year cycle, this is exactly where the top would have landed on the 6th of October 2026. Time-wise, we've actually fulfilled the 4-year cycle, and we have now entered into a bear market. Bitcoin's price is coming down quite steep. Let's have a look at the RSI very quickly. Again, zooming out. So the RSI obviously is oversold. So we do expect that. I mean, this can actually stay down here. I don't know if a lot of people know. This can actually stay down here for a long time. When did it get down there? It kind of got down there in the 20th of January. And it can literally stay in here for weeks, if not, it's been pretty much about a month. And then obviously we can bounce and go back up. That's pretty much what the chart is doing. Sorry, I've got a window open, and that's an alert from that window. I'm going to close that window as soon as I've shown it. So that's pretty much the entire cycle. One thing to note here is that on November the 5th, we obviously had the elections. We are coming down to that as well. So we've pretty much cancelled out everything that we did last year, which is not surprising, if I'm completely honest. Okay, if we look at, I can't see your screen. Okay, you can see it. If we have a look at the fibs now, so we've got the fibs up for Fibonacci. Now, these are Fibonacci retracement levels, and they're drawn from major or swing highs and lows. They're basically a map where price often pauses, it rejects, it bounces through pullbacks, if that makes sense. Yeah, so the key zones everyone's watching is obviously the golden pocket, which is here, and that's roughly 0.618 to 0.65 retracement, and it's a classic area for support and resistance, and you'll see the price reacting around it. And we did have quite a bit of consolidation in this area. It was resistance and support and resistance and support, and then we had the fake out, and now price has gone below it. If price is below the golden pocket, then the zone usually flips onto overhead resistance, if that makes sense. Once you lose this level here, once you lose the 0.786 level, you're basically into deep retracement territory. And at that point, the market often starts to target the 1.0 level. And it's pretty much down there. In fact, I did this before I went out, and it hadn't touched that range yet, and it has now. Okay, let's have a quick look at, let's see if I'm sharing it. Yep. So this here are moving averages. So we've got the 50-day moving average in the green, bearing in mind I am really zoomed out. 1 second. Zoom it in a little bit. Okay, so we've got the 50-day SMN, and that's the average of the last daily closes for prices over the last 50 days. It's a mid-term trend line and it's useful for things like momentum, for pullbacks, but it's not like a regime line. None of these are. The 200-day SMA is in the red. Now, that's the average daily closes over the last 200 days. This is the one that people use as a bull and bear regime filter. How people actually see the 200 and the 200-day SMA. Now, if Bitcoin is above the 200 SMA, the market usually treats it as bullish risk on. If Bitcoin goes below the 200-day SMA, the market is generally treating it as a bearish risk and risk off. The 200-day often becomes support in bull markets and resistance in bear markets. Let's see if you can see it. So when the 50, so this line here, when the 50-day SMA crosses below the 200 SMA, the 50 is like the faster moving SMA. When it closes below the 200-day SMA, a death cross is formed, and traders treat that as bearish confirmation, although it's not a prediction because it's happened several times before as well. And it often appears after a sell-off, but it is a lagging indicator. If the price is below the 200-day SMA, then the death cross forms. When the death cross forms, the 200-day SMA is commonly acting as overhead resistance until the price reclaims it. And we can see from here the 200-day SMA is very far away from the price. Not only that, these two lines are getting further and further apart. Now we have had a golden cross here. That's when things flip the other way and it's more bullish. That's when the 50-day SMA goes above the 200-day SMA, and we went into the bullish territory and we made our all-time high. And then, we've had bearish crosses, we've had death crosses, and golden crosses as well. What's the difference between these and this particular one here is that the lines kind of stayed close together, if that makes sense. And here they're just getting further and further apart. And this is very much bearish. If we have a look at, and again, I'm zoomed out because we want to know where we are in the market. If we have a look at the weekly heat map, we've pretty much taken up all the liquidity that is down here. There is a lot more liquidity above, especially around the 79,000 level. Especially around the 79,000 level. If we have a quick look back at the fibs, the 79, okay, so we would 79, we will still be between these two levels, even if it was to come up and take that liquidity. And I do expect it to come up, and actually I think it has slightly moved. Yeah, it has kind of come up anyway. But I do expect now we're going to have a bounce from this level here, which might act as what's its name, support. Your browser has lost connection. Can you guys still hear me? M Ninja, how are you? Mr. Yep. ENF. Bitcoin's price action is scary, not gonna lie. It is. Hey, peace of my mind. I hope you're well. Please do like and subscribe. I hope you guys can hear me. Oh yeah, okay. Thank you so much. So the sound's good. It's just told me that you guys can't hear me, but don't worry. I'm not going to worry about that. If we have a look at, so we've had a look at the heat map. We've had a look at the chart. We've had a look at the fibs. We've had a look at the moving day averages. We've had a look at the what is it called? The heat map. What we're going to do now is we're going to have a look at this fractal here. Now here we're in 2026 and we've seen this fractal, and here it's moved out of place. Hang on. There it is. Okay. Yep, so October. Okay, so let's have a look what happened back in 2022 and why 2022. Why I'm going back to this fractal. First of all, is following the fractal. The second thing is we had just made the all-time high, and we were coming. So here's the all-time high at 69,000 US dollars. We made the all-time high here. I think it was the 10th. Was it the 10th or the 11th? The 10th. So we made the all-time high on the 10th of November, 69,000 US dollars. And then we entered into a bear market. We rolled over into the bear market. What was happening around then was that everybody thought it was going to go to the moon. Nevertheless, we rolled down into a bear market. The bear market was in the first quarter, or this fractal here started up in the first quarter of 2022, which is pretty much where we are now. Now, we had the all-time high here in October in quarter 4 of last year. And then the first quarter of the year after it, we've come down, and we're pretty much following this fractal here. We can see this trend line here, as we can see it back here. We had a couple of touches. We went down, up. We had a fake out, and then we went down. Exactly the same thing. We chopped around here. We had this fake out, and then we are going down. We are going down. What we see here is we went down, we consolidated a bit, and on the other chart, can you see my cursor? Yep. We went down, we consolidated a bit, then we went down again. Now, on this chart, when we went down again, we did consolidate for a bit. So whether or not, hey, Mark Volmer, I hope you're well. I just saw you there, so I'm just going to put you on the screen. I hope you're well. So we went down. Sorry, we are going down now. If we're still following this fractal, we may now consolidate for a little bit like we did before. And this round about here, so we're talking around about May all the way to June, so a good couple of weeks. We might have that here. Nothing goes straight up and nothing goes straight down. In the markets, we always get those bounces. So we may bounce here for a little bit, considering as well that the Fibonacci, we have respected this level. We have hit the level. We are slightly coming up, bearing in mind, we've only probably been, I don't know, this is probably in the last hour. So we could do anything, quite frankly, we can go underneath it, but we could come up and maybe respect the level above it, simply because there seems to be more liquidity above. We're not going to know until later on. Anything could happen. Anything can happen. If we are following this fractal, I do think that we will probably consolidate for a little bit before we go down again. Obviously, all fractals, we're not going to follow it completely, if that makes sense. If we have a look, I've got fibs on this side. I should have put this one up. 1 second. There we go. Oh, I love it. You got fibs. If we have a look back here and we put the fibs on, so we put it on the highs, and then we've done it from a major turning point, and we've done the same here as well. We had the golden pocket. We consolidated, or we hit it a couple of times here. Same thing here, roughly. Same thing here. We went down a level. Here we went down a level. We consolidated a little bit, but if we go down, we actually where was it? It was around here. If we go down, I'm not going to put it on again. If we do go down, we've actually hit this Fibonacci line. Let's see. We'll know in 2 weeks, or we'll know pretty soon. I'm going to have this same stream on again in 2 weeks, and we'll see whether or not it's consolidated. It's anyone's guess. It's anyone's guess. if we have a quick look at Bitcoin's dominance, if that makes sense. So if we have a quick look at Bitcoin's dominance, pretty much there's no point looking at it on the daily, but here it is on the daily, and it's respecting these two lines off the fib. So we've got the 0.65 and then the 0.786. It's just respecting them, and it's just going sideways. I do expect it to have a lot more sideways action. If we zoom out, we have respected this trend line from 2022. We've been making higher lows and higher highs. I can't wait to get rid of that. I think that's on the ETF. What's its name? Where is that? Yeah. Oh, okay, so I'll get rid of that one. What screen am I sharing? Yeah. So we made higher highs, higher lows, all the way back from 2022. Where it comes to rolling over with Bitcoin dominance, I have done a live stream on it. It's going to be quite difficult to get those massive pullbacks because we now have things like stable coins. We now have a lot of other coins and all the rest of it in the market. So getting those huge major pullbacks may not happen. We also have the ETFs. We also have institutions buying up a huge amount of the Bitcoin supply. OTC is really low on the amount of supply that it has. So here we go. So we've gone down. This was a 8 to 9% move. This could have been it, quite frankly. And when it goes time wise, it kind of goes with October could have been the top. So from June all the way down to September, that's when a lot of money was moving out of Bitcoin, most likely into altcoins, and that's what we see there. I could put up the total 3 chart, but I'm not going to do it right now because I do want to keep cycle checks quite short. Nothing really to see on Bitcoin dominance. It's just oh, yep. So this trend line, obviously, from 2022, it was broken, and now it's acting as resistance. It was support, now it's acting at resistance. If we have a look at the ETFs, now massively big players have come into the market. We all wanted to be fair, I never wanted institutions to come in because I don't think Bitcoin is a place for them. Altcoins are. I didn't like them in Bitcoin. Anyway, institutions have come in, so the wish was granted. What we have had, I don't have my phone on me. We've had a number of outflows, quite a decent amount of outflows from the 20th of January. So the last part of last month, bearing in mind on the weekends, they don't, this doesn't get recorded. So we've had, on the 4th, we had 554 million outflows from the Bitcoin ETF. On the 23rd, we had 222. And then on the 2nd, which I believe was the Monday, we actually had inflows of 561. Last week, there was a huge amount of outflows when it comes to the ETFs. Okay, so we've got Ethereum up now. So with Ethereum, so on Ethereum, on the Ethereum chart, I've drawn Fibonacci again from a cycle low of around about 136, I think it was. Sorry, 1036. Yeah. Sorry, 1,336 up to the high of this cycle, which was about 4,900-ish, just under 5,000. Now, the key retracement levels obviously are always the golden pocket, which is 0.618 and 0.65. They're the golden pockets. Price has come back to them, and it's important because these levels often act as a major retraction support. If ETH can claim or actually it's gone underneath, hasn't it? It's gone underneath 0.786. If it can go above that, we're talking about a relief back to the zone above. We're talking about a relief back to the zone above, and it could have been a fake out, because if it comes down to the 1.0 level, that's considered a very steep reaction. So the chart is signaling a risk of a very deep move towards the lower end as well. The RSI is oversold already. That does not mean it's a bottom. In bear market phases, the RSI, like I said before, it could stay oversold for longer than people expect. So I'm watching the price levels first, the RSI second, and then we're just going to go into the heat map as well. So what am I watching is, does the RSI stabilize or does it start to curl up? And does that price reclaim the key level? Because that's where the possibility of a bounce becomes more likely. If we do bounce from the oversold area, it's normally a relief bounce first, and then the trend can change when the structure changes, if that makes sense. Here's the alerts. Gosh. Okay, so here we've got Ethereum. Again, it's on the week. There is liquidity slightly below, but there is more liquidity above, especially around the 2,400 mark. The 2,400 mark. Okay, so that's going up just underneath the golden pocket. So if it does bounce, it could go back in between these two levels towards the golden pocket. Yeah, towards the golden pocket. So yeah, it's pretty much it has taken a lot of liquidity out. It could still go down. It can, yeah, and it probably will go down as well. When it comes to the ETH ETFs, it's a bit of a mix in and out. On the 4th of February, we did have 69 million outflows of ETF. On the 3rd, we had 14 million inflows. On the 2nd, we had 2.9 million outflows. Now, on the last day of January that's been recorded, the 30th, we had 252 million outflows. And before that, we had 155 million outflows. We look at ETH. Basically, let me kill that tab. 1 second. There we go. So we look at ETH because ETH is the largest altcoin, and it has the deeper pockets, and obviously there's a lot of rotation into Ethereum. If we share this chart here, what we normally see is down here we've got 2011, 2012, 2013, which was a bull market. So 2012 was the halving year, then we have the bull market year, and then we have the bear market year in 2014. Actually, bear markets went into 2015 as well. Bear market is red. Then we have the recovery year, we have the halving year, and then we have this candle on 2017, which was the bull run year. And then we have 2018, which was the bear market. Again, we have what happens in a in a bull market is that prices just go up to an extent that they can't be sustained, and people take profits, especially traders and investors, especially traders actually, and that's why we then have the bear market. After the bear market, we had the recovery year. 2020 was a halving year. We also had a lot of stimulus in 2020. It was COVID year as well. 2021 was a bull run year, and we did incredibly well in that bull run, double peak. After the bull run year, we have a bear market, which we followed through. and it was a very difficult bear market. We probably won't have that type of bear market again, simply because the baseline or the price will hold at a certain level because you have a lot more institutions coming in. But I do think we are going to go further down. Then we had 2023 recovery year. 2024 did exceptionally well, especially at the end of 2024, because money tends to follow into crypto in the later part or Q4 of the halving year. And that's what we saw here. We had 2024, and obviously we had Trump and all the rest of it. 2025 was meant to be the bull run year, as in this was meant to end green. It did not, it ended red. And then obviously at this moment in time, and nobody knows what's going to happen in 2026, at this moment in time, 2026 is looking bearish, but we're only in February, anything can happen here. When it comes to, we're going to have a quick look at on-chain data. I'm going to get through this quite quickly because I have done some work on Pi Cycle Top in the past. So the Pi Cycle Top is an on-chain indicator. It's based on the relationship between two moving averages. We covered the 50 and 200-day moving average earlier in the stream, and obviously the death cross that it can make death crosses and golden crosses. We're going to be looking at the 211 day moving average, and also the 350-day moving average times 2. And that signals very accurately cycle tops and cycle bottoms, and it's also based or made from this from the pi mathematical magical number, which tells you how round a circle is, 3.14 blah blah blah. It goes on forever. Now we have had multiple tops and bottoms out of the last 5, not including the last one, because not including the last one, we have had 5 tops, and then we've had the Pi Cycle Top accurately call 4 of them. The only one that it hasn't called is the second peak in 2021. The price difference was only $5,000, and some people consider the second peak as being a dead cat bounce. Now, when it comes to what's its name last year, they didn't cross. So the red line is going to the red line has to cross the green line, and it didn't cross. 1 second. So it didn't cross. They are quite wide apart, so it doesn't seem like there will be a Pi Cycle Top or a Pi Cycle Bottom, because if it crosses the other way, it will actually tell you if there's a Pi Cycle Top bottom as well. So these kind of seem wide apart, kind of suggesting we're probably going to do nothing much when it comes to top and bottoms, if that makes sense. Okay, so another thing that we're going to be looking at is the MVRV. Now, the MVRV ratio is an on-chain indicator, and it kind of uses real. It does use real blockchain data. So it's not just about price, and it's not about external sources. It's based on what's on the actual blockchain technology, and it gives you a more accurate picture of market behavior than traditional indicators that only look at price trends, if that makes sense. Now, the MVRV is best treated as a early warning or a risk zone tool, not to be used as calling the exact all-time high or the all-time lows, if that makes sense. So we've got the MVRV Z score, which is basically on steroids, the MVRV on steroids, and then obviously down here we've got the price charts. Now, the MVRV itself, holders basically buy Bitcoin at different times at different prices. Some holders bought their Bitcoin a long time ago when the price was low, and some people bought their Bitcoin recently when the price was high. And depending on the price that people bought their Bitcoin, they may be in profit or they may be in loss. The MVRV, market value to realized value ratio, shows how much profit or loss Bitcoin holders are making, and it compares the current market of a market price of Bitcoin to the market price, or sorry, to the price that each of the Bitcoin last moved, if that makes sense. It's actually quite a good indicator because it shows you if people are in profit or if they are in loss. Now, the more people are in profit, the more likely that they are to take profits and exit the market. The more that they are in loss, the more likely they are to hodl their coins. The more likely that they are to hodl their coins. Now, it's not there is an issue to it. So it records when Bitcoin was moved on chain last, and it records that transaction. What it doesn't record is whether somebody bought it to buy it to sell as an investment trader, or as a trader or as an investment. So if somebody bought their Bitcoin, yes, that will reflect in the MVRV. If somebody bought their just move their Bitcoin between their wallets from, say, a hot wallet to, another wallet or whatever, the blockchain can't tell the difference, but it still counts as a new cost. So it's not the be or end all. Now, the MVRV is currently signaling that it's quite low. It's quite down here. So it's kind of signaling that there's not a lot of people in profit. So it's very unlikely we're going to have a blow off top. It's very unlikely we're going to have the hype that we're all looking for, because a lot of people are not in profit. And this happened back in November 2021 as well. It didn't actually show the top of 2021 because recently a lot of Bitcoin had been changing hands, but we've just had, or very recently, we've just had an all-time high. Another thing that we'll be looking at, so MVRV is kind of showing, we're nowhere near a top, if that makes sense, or similar. This is the Powell multiple. Now, miners are the backbone of the Bitcoin networks, and they can be individuals or they can be companies, but they do the same job. They run machines that secure the Bitcoin, and they also produce new blocks. They earn revenue in two ways. One, they earn block rewards for new Bitcoin, which is created with every block. So every 10 minutes, 3 point something Bitcoin is created. If you mine that block, or if you you get that block, you get that Bitcoin. But they're also paid in transaction fees. And now these are paid by users to get their transactions confirmed. The Powell multiple simply answers one question, and one question only. Are miners making unusually high or unusually low revenue compared to the last 12 months? So technically, we're looking at miner economics, because miners are, in the entire ecosystem, exceptionally one of the most sensitive, apart from maybe retail. They're very, very sensitive to price changes because of the costs of securing the network. Mining is not just about turning on a computer and plugging it in. It's things like power, heat, machines, repair, staff, space, financing. Miners literally run physical hardware 24/7. So, and they have bills to pay. It's very important that they're earning money. Now, we have had diminishing returns. I will be doing another live stream actually on Thursday coming up. We'll be talking about 2021 sorry, 2011. The pi cycle top was hit in 2011. Not just the pi cycle top, the Powell multiple, the MVRV, a lot of on-chain data, a lot of on-chain indicators were hit in 2011. In 2011, and we'll be looking through why that was as well. So the pi cycle, the Powell multiple was quite high. here's where it counts. In 2013, in April, we had two tops in 2013, and it hit in November 2013, which is the two tops there. It hit in December 2027, which was the second bull market of Bitcoin. It did also hit in February, so just before. And bearing in mind, this doesn't tell you the exact date that they're topping. They're going to top, because it has nothing to do with the price of Bitcoin. This is minor economics, if that makes sense. So it hit in 2021, especially on the first peak. Right now, it's very, very low. If mining gets below 0. If it gets below 1, or even lower than that, 0.1, miners are in trouble. What they tend to do is use their machines to mine other coins, or repurpose their machines, or literally just turn them off. So that's something as well. So on chain, that's not looking like we're anywhere near a top, if that makes sense. Here we've got the M2 money supply. Now, Bitcoin runs on a number of things. It runs when there's liquidity in the space. It runs when there's regulation in the space. It runs when there's stability in the space. It runs on hype. It runs on bullish news. Now, the M2 money supply has been increasing. It's been increasing for quite a while, especially from down here when we had the bear market bottom. The M2 money supply is a leading indicator, and Bitcoin tends to follow it. There is a lag of about 11 weeks. Nevertheless, the M2 money supply has been increasing, and Bitcoin's price has been going down, or it hasn't really been moving much. And again, the M2 money supply is increasing, and it's not really affected the price of Bitcoin. This here, I just think it's just a fun thing, if I'm completely honest. Nothing else. Here we've got the Bitcoin rainbow price chart indicator. And even with our recent all-time high, we're in a fire sale, or in the buy color, or in the accumulation color. We're nowhere near what it was like in the previous tops. Again, diminishing returns here. So here we've got 2011, and obviously we'll be talking about 2011 next live stream. We've got 2013 here. Again, it was hit in 2014, but we've got December 2017. We've got the two peaks of 2021, and it's done absolutely nothing. It really has not performed this cycle at all. We've got, when it comes to this is quite important, especially if you are not a Bitcoin maxi, or you don't really hold anything. So you hold degen profit, degen tokens, like I used to be. We have now 32 million altcoins. Bearing in mind, I'm pretty sure a lot of these are scams. A lot of them are dead coins. A lot of them are dead projects. A lot of them are memes, but they're not all like that, if that makes sense. We literally have so many coins. It's absolutely ridiculous. Back in 2021, that's 2024, 2023. There you go. Okay, so back in 2021. Oh, it's not. Hang on, it's down here. Back in 2021, we had just under 20,000 coins. Just under 20,000 coins. Back in the epic bull run, the first altcoin, what's its name? First alt season, we only had. Oh, we did go up. What is that? I hate it when it's written in American ways, in the American way. Again, right, that's less than 20,000 in, that's 2018 though. So 2017, around about the bull run, there was 17,000, about 18,000 coins. A bit more in 2021, a bit more in 2021, but pretty much nothing compared to the 32 million altcoins. And that's why we see a lot of people who are degen investors pretty much get wrecked. Fear and greed is literally at 11. Alt season index, the way that this website does it, it's put it at 31. Bitcoin's down, Ethereum's down, BNB's down, Solana's down, XRP's down. I hope nobody thinks it's a bull market, but you know, there you go. Okay. Thank you, John Legend. If you can comment after the stream, that would be really good. Please do hit the likes. Welcome, Mr. Alex Storyteller. I hope you're well. I think that's everyone. Grandpa Keeter, I hope you're well as well. Okay, awesome. That's us done for this live stream. It's a cycle check live stream. They will be happening every 2 weeks. So we'll be the first to know how the cycle's changing, if that makes sense. Other than that, on Monday, actually, I've got a live stream on Monday with Jason Casper, who, if you're not aware of who he is, he's a trader. He's a very good trader, and he has his own crypto YouTube channel as well. So do tune in for that. Monday is Jason Casper. Tuesday, we have a live stream with Bill Noble, and we are probably going to be talking about institutional money, ETFs, all the rest of it. On the Thursday next week, we will be talking about 2011, that year. Maybe we'll have something similar to 2011. I've got no idea. But that's brilliant. Thank you so much, and I'll see you all later.